Mr. Chairman, thank you very much for calling me to speak on behalf of the Congress. I'm happy that the Appropriations Bill and the Finance Bill are taken together. I believe it gives us a fairly wide canvas to speak on the economic and financial situation of the country. On the Finance Bill, I have a few points, and I'll be very brief on each point, knowing that I have very few minutes left. The Income Tax Act has 298 sections if you do not count the sections with suffixes like A, B, AA, BB, etc. And it has 14 schedules. The Finance Bill has 125 sections, clauses, of which 84 pertain to amendments to the Income Tax Act. And the Honorable Finance Minister has moved 39 amendments to the 125 amendments in the Amendment Bill. Now, honestly, every member is to search his heart and say whether anyone understands these things. I did not. I spent a lot of time trying to understand, and I can't say I understand it. This is a legacy issue. I concede that. This has been going on year after year after year. But this must stop. This government claims that it will dump all old legacies. This is one legacy this government must dump immediately. And I think the entire Income Tax Act must be replaced by a direct taxes code. When we were in government, I had helped draft a direct taxes code. Then the Honorable Mr. Pranam Mukherjee tried to improve it. When I returned to the Finance Ministry, I tried to improve it. There are 3 versions of a direct taxes code. Many of the provisions will be outdated. So get rid of all of them. But please bring a direct taxes code immediately. No one benefits from this Income Tax Act except the chartered accountants and the lawyers. Specific points, sir. Firstly, what are you doing about charities? Now, the most famous clause in the Income Tax Act is Section 10, Clause 23C. In the printed book, it occupies 8 pages. The Finance Bill has amendments which run to 9 pages. So an 8-page clause is being amended by a 9-page bill. And subsection 23C alone occupies 9 pages. That is exempt income, including charities. And then we have sections 11 and 12, under which income from charities are exempt. They are subject to conditions in section 12 capital A, 12 capital A, capital B, and section 13. The Honorable Finance Minister has once again amended section 12 capital A. And there is another section called 115 capital T, capital D, which is about accreted income. Now, a day will come when a charity or a religious institution, which is a charity, or an institution, a trust, which is a charity, will say, let's get out of these clutches of this Income Tax Act. If we have an income, let's pay the tax at 10% or 20% or 30%, whichever is the applicable rate. Let's get out of the Income Tax Act. Most charities today, most trusts today are crippled by these provisions. and the repeated amendments year after year after year. Please clean up these provisions. If you believe that charities and trusts have a place in this country, let them function with a reasonable degree of independence and light regulation. This is no way to encourage charities and trusts. If I was starting a charity or a trust, I will say I'll pay my tax, just leave me out of the Income Tax Act. And this whole concept of accreted income is very regressive. If the exemption is cancelled under 12A or 12AA, if it's cancelled, the entire income which had been exempt for the past several years is now deemed as accreted income, and on that accreted income you'll have to pay a tax. I think these are gross provisions. These are burdensome provisions. This is not the way to encourage large charities, large trusts. Yes, if there are misconducting charities and trusts, take action. But don't stifle, don't throttle the throat of charities and trusts by these provisions. The next provision is this novel concept called faceless assessment. Sir, earlier there was an assessing officer. He knew the assessee's history. He has the entire records with him. The assessees may have been an assessee for the last 30 years or 40 years or 50 years. He knows his history and then he will deal with the assessment. There are enough provisions to ensure that no income escapes assessment. Today we introduced a faceless assessment. We don't know who the assessing officer is. We don't know where he is. We don't know whether he has all the past records of the last 20 or 30 years. We don't know what assistance he gets. How is this an improvement? Of course, some people will argue a faceless assessment is a great improvement. According to me, this is a regressive provision. Numerous people have complained to me that this faceless assessment has put them through enormous hardship because we don't even know who's hearing the matter, who's deciding the matter, what records he has. The amusing part is the National Faceless Assessment Center has 3 units. There is an assessment unit, there is a technical unit, there is a verification unit. I ask honorable members, if you have the time and the inclination, go through those provisions. By the time an assessment is completed, if there are queries, submissions, clarifications, it will go from unit to unit to unit. From faceless center to the assessment unit, back to the faceless center, to the technical unit, back to the faceless center, to the verification unit, back to the faceless center, back to this faceless assessing officer. This is completely regressive. I'm sure sooner than later, the Honorable Finance Minister will recognize that this is not a progressive step, this is not a liberal step, and this is causing huge hardship to SSC. The next provision I want to draw the Honorable Finance Minister's attention is section 149(1)(b). Now this is the time for reopening assessments. Earlier, the time limit was 4 years, but the assessing officer had 6 years under certain circumstances.